Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report for August 21st, 2015. We're in the midst of a major corrective pullback. Call it a powerful, perfect storm type of correction. And in my opinion, not the start of a ongoing yearly bear market. Now, I've been through the markets through many cycles. My first experience through the first crisis in the market came about back in the 1998 Asian crisis. They call it the Asian flu, which was also a currency um, war type of thing where the Thai baht melted, and there was some real pain in the Asian markets, which drove a series of events, including the blow up of long-term capital, which was one of the largest hedge funds at that time. Because they made some big bets on Russia and Asia and all kinds of stuff. You can read back on history, just Google it. Here is the long and short of the story here. We have a perfect storm, as I just mentioned. We have oil prices hitting multi-year lows. That's causing a complete panic attack, and rightfully so, in the high-yield junk bond market. I don't want to get into too much in detail on that. I post enough important articles for people to read up and educate themselves on what all those mean. The bottom line is that all that money borrowed at cheap rates on the shale oil exploration side, and some of the majors, meaning the large oil companies, issuing bonds and doing secondaries and raising money and stuff like that. Well, this is sort of the blowback. Okay, interest. So that's causing and I explained this in my video cast too, that that what we see on the surface is basically equity stocks, right? And then what's underneath the surface is the credit markets, which is corporate credit, corporate bonds. Then you have high yield bonds, which is corporate bonds, which are lower rated, also known as junk bonds. Then you have the treasury market, which is the government bond market, and that's obviously the safest haven in the world. The U.S. Treasury market has never defaulted on a payment, and neither did neither did they do that. If that ever happens, well, see you later. Well, that's probably not going to be the case. So you have that. Then you have a massive currency devaluation and a currency war, in quote unquote, that started off in China with their quick devaluation of the currency, about 2 weeks ago, and that started off a firestorm. And now we had yesterday Kazakhstan, which is one of the biggest oil producers in the world. The Kazakhs went out and basically their currency devalued by 40% or something. So you're having this massive tsunami of stuff that's hitting the markets, and you also have the Federal Reserve, which is going to most probably stick to raising rates in September. And the Federal Reserve is sort of stuck in a quagmire what to do. In the meantime, you got massive institutional margin calls in large hedge funds, which are literally on segments of their oil and commodity sector blowing up. Okay, so they're coming in with these massive hundreds of $millions worth of margin calls that they're being forced to sell out, and that's causing a huge firestorm, like a wildfire out in California, right? And that's hitting stocks. Now, in particular parts of the stock market, certainly things are overvalued. We all know that. That's old news. And markets can stay overvalued, for many different reasons. So, saying all that, as traders, I've guided every one of you as humanly possible to make money throughout this treacherous market that we're going through. And believe me, even when markets were going higher, people were having difficulty buying into a runaway move market. Okay, now we're seeing what I've explained clearly over the past couple of months, if not over the past couple of weeks, to all my members, as well as my advanced coaching session members, who are extremely knowledgeable about these levels. Now, how you react to it on a daily basis, that's something you just got to learn. The best traders are made through the most difficult times, just the way, life is. All right. A diamond is shaped out of massive pressure. And that's just the way things are. So I can't give you some, sympathetic words like, oh, this is all going to go away and this and that. I put out a video cast the other day, hour and 40 minutes long, that a lot of you attended the market webinar, which talked prepare for the downturn. Well, this is the downturn. All right. And it's not like we're going to melt and just go away. There's going to be fantastic rallies in between this corrective pullback, and we have to take advantage of it. So you got to keep your trade small. You got to be fast. If you're an active trader looking to make 100, 200, 300% during the day on specific in this SPX or RUT or QQQ, whatever the index options that we play, great. If you're a swing trader, you have to look at your position, look to see where you want to add and what do you want to do. If you're a momentum trader with the Netflixes of the world and the Googles and Teslas, well, you got to run with the wind. You got to go back and forth. You got to go back and forth, or you just sit back and learn. That's the best piece of, suggestion and, input that I can give. Remember, this is not, I've always said this. This is not your mom and pop's market. It's driven purely by technicals with algo HFT programs that are in the market on a minute by minute basis. And we're still going through it. I'm short the market via puts, which I put out there, bought them around like 4 or something like change. They're going to open around $17 or 18. All right. And that's just the way it is. And any sort of long positions, dwindle it down, keep small positions. One of the biggest things that I ever did to help people was to tell them to basically sell the market on that Fed spike right here. And that was on right here, sorry, on Tuesday, Wednesday, right? The Fed was, the minutes came out on Wednesday, 19th, yeah. And I told people, sell, take your profits, kept on doing it. Guys who didn't do it, well, you're suffering right now. But that's okay, because here's the best part of the news. Things are going to get cheap, and we're going to have a violent bounce. There's no question about it. So let me show you where I think the points are. So here we have a chart of the Dow Jones Industrial Average. I've shown this many, many times. Let's show this again. Let me get the drawing tool. And so we have this major support here that was broken, right? Told people many, many, many times that if we break below the 17,300 level, and of course we had a huge dragonfly reversal hammer that day, which was a very large sum of money for active traders that day. So a lot of you participated in it, and basically now we are just this massive capitulative sell-off right there, right? So where does this go? This is straight line down. Now, if you look at the daily charts here, you can clearly see that we're not oversold yet. Funny, huh? We're not oversold yet. On a shorter term basis, yes, we are. So you're going to get these little hiccups and stuff, but I'm talking about a real tradable bottom. We're not there yet. So, and you can tie it to your to the emotional angst of investors as they read the weekend papers. So here we are. We're not oversold yet. So once we get to these levels where we get oversold in this range, and keep on repeating the same thing, get oversold in this range, you get monster rallies that last for a couple of days, and you got to take advantage of it. Whether they last 24 hours or 48 hours, you got to do it. Or whether they last, if you have a 500-point move on the market in 3 hours, what are you going to do? Sit there and say, oh, I'm not going to take my profit. It's going to go up 1,000 points? No. You take your money and you say, I did good. That's just the way it is. All right. So now, so we have or not oversold yet. So I'm looking for points here. So at this point, if you want to do the pattern symmetry, which I've explained before, this was the massive monster move for similar type of reasons, high yield junk bond panic and such, back in October, middle of October 2014. We had a monster move. We went from 15,800. Okay, all the way up to 17. We went up 2,000 points. I've repeatedly said to people that a $10,000 investment here would on the option type of aggressive trading would have yielded more than $200,000 plus of money up here. Now, is it possible that we are replicating this move down as we have a downtrending 50 and the 34 line, which is obvious here, okay, which will act as major resistance, these two lines here. And completely finish the cycle and go down another 1,000 points from here? It's possible. It's possible. Now, will it do it in one day? No. It's going to do it over probably by October, in my opinion. In my opinion, we probably go to 16,000 by October, and we get a monster rally that ends the year on a positive note. I mean, talking monster. And by that time, literally, there will be nobody looking at CNBC, and they're just going to be just frozen, gone, just the way things are freezing right now. So you have to be tactical. Now, if somebody says, I'm going to short here because this daily looks like, there's a nonstop move down here, well, you're going to see a lot of these zigzags, just the way you saw zigzags along the way as it moved up 2,000 points. You're going to see zigzags along the way as we give back 2,000 points. So these zigs and zags are going to cream you, or going to take you out if you are just dogmatically short. So you got to play it the way it is, or else you just say I'm going to buy an S&P 1970 put out in October and just watch the screen every day. It doesn't matter if they're like the puts go from like $8 down to 3 or whatever. Eventually you're going to make money. So that's just the way it works. You have to be engaged. At this point, this support, I believe there will be a bounce back into the support. The Dow will try to take back the 17,000 plus and try to get back in this channel. So a channel entry into 17,200 would give us a relief rally, a big one, up to again, I believe this first support level here to 17,600. Is it possible? A 700 point, 500 plus point rally over a couple of days? Yes, it is. But then, in my opinion, that probably fails, and then we start doing what we need to do. So there's your Dow Jones. Now, I've also put some extremely precise charts, which are more relevant for traders on the Twitter feed, and you got to study them because that's where the money is. So let's take a look at the S&P 500. So here we are with the S&P 500, similar type of story. And here's the interesting part. We're not fully oversold yet. These arrows indicate that, these are buy points. So the buy points are not there yet. The buy points are here. So it needs to get down here, get real oversold. We're in purgatory here, just kind of hanging, right? So some people can call it a positive divergence because the last time we were at these levels, look how oversold we are. Right now we are at the same levels, but the stochastics are not down to those levels yet. So you can call it a positive divergence. It's possible. So, but the vortex indicator and everything is kind of showing that we have more room to move down. Now this is on a 4-hour chart. All right, so we're not fully. And that makes sense because there's going to be monster margin calls again, people freaking out and not wanting to buy things and all that stuff. So at this point, when I look down here, I would say that we get to the bottom of the support, which I showed yesterday, which is around 2032. And I will tell you that pre-market, we did test some much lower levels on the market. Okay. So 2030 would be an S&P point of a possible bounce. Let's take a look at the Russell 2000. The Russell 2000, this hammer candle reversal, this one has obviously been obliterated. So that's out of the picture. So at this point, we are in this free flow zone. So the next level of support that I can draw is here, okay, which is around 1155, little less than 1150. Otherwise, there's this gap here that was filled, and it's possible that that the market basically tries to get back in the gap and back into the channel. Now, all this will happen if oil goes, oil bounces. So watch those oil charts. All right, oil bounces hard. There's some sort of simulative measures out of Asia, currency stabilization. You can very easily see this thing move up to the 1200 level again. Okay, 30 points. Now, if it breaks above that, that's a different story. Okay, now Nasdaq Composite. Now remember, I'm showing you all this stuff because this is where the stocks play. Now the Nasdaq has, obviously you can see here we're not fully oversold yet. See that? Right now I got to be quick here because there's only a few seconds left, and we're back in this box here. So what's the support level? The support level is here on the Nasdaq. The support level is around 48.30. So we're getting close. We're getting close to a sizable bounce, and of course there's a gap here. And I don't know, and it's possible that we get to the gap as panic selling really steps in. So in the meantime, stay with the short bias. If you're playing the longs, and I certainly will be, make it quick. All right, don't expect for miracles. This is the market that trains traders to be ultimate money makers. So just think of it like that. In every crisis, there's an opportunity. This is no different. And believe me when I tell you that this bull market that started, look at the weekly basis. All we're doing is we're retracing down.